All right, guys. So we are live today, and we're going to do a quick market update for the real estate market here in North Texas. So there's been a lot going on, to be honest, ranging from the recent news about the Fed when they met. Unemployment ticked up a little bit more than expected. So we did have a rise in unemployment, which actually had a positive impact on interest rates. So let's just go back last week. We're sitting around 8% interest rates, and it's kind of a negative feel. We expect interest rates to stay pretty high. Tuesday, more jobs report comes out. Unemployment has increased. They've adjusted down on jobs for the last 2 months. They go back and make some corrections. And what we see happen on Wednesday is interest rates are at 7.3. They dropped by over 0.5% within 24 hours. So there was a major move in the market. If you follow any of this, what you will know is that there's a large spread between the Treasury yield and the interest rate that is a little bit more than what we would expect. So the bond market has the interest rates around 5.2 to 5.5. That should yield like a 6.2 to 6.7% interest rate, but it's actually putting us, at 7.5 or even 8%. And the reason for that spread is because there's a lot of uncertainty in the market, and therefore the interest rates are kind of hovering higher than they normally would, waiting for the Fed to signal that they're no longer going to raise the interest rates. So if we get some consecutive news with jobs reports coming showing higher unemployment, that would yield a softening on the interest rates that would even if the Fed do nothing to interest rates are hovering about 1% higher than what they are in reality. So there's an artificially inflated interest rate because the spread between the interest rates and the treasury yields too high. Now, what that means for you is if we get a couple of months with good inflation data or good jobs data, what you're going to see is interest rates are going to go to the normal spread between the treasury yield and interest rates. That's going to happen at some point. And when that happens, you're going to see interest rates, in the mid sixes, I believe. Now, what I'm saying is just based on my observations of the market, based on what I'm seeing. But if you go and look, there are many indications that this is the case. I've looked at a lot of the reporting from folks, and if you just go look at the spread between um, interest rates and the treasury yield, you'll see that it's not in sync with one another right now. It's out of sync. And a part of that is the mortgage market is trying to prepare for any more increases by factoring in the risks that are involved. So, with that, the question is, well, what is the real estate market like? Well, just from someone who's actively in the business, um, I have about 13 listings right now that are currently on the market, so I'm able to kind of track the pulse of the market. On Monday, I wasn't getting many showings. On Thursday, we had more showings than we've had in about 6 to 8 weeks on Thursday. So we had a kind of a uptick in the market, more showings started happening, more interest, more traction. So that's something to note. So overall, this is a pretty slow season every year. Added to the fact that we're at 8% interest rates and taxes have gone up and insurance has gone up, things have really kind of quieted down more than even what is usual during this Thanksgiving, Christmas, New Year stretch. But I do expect that if we do get consecutive, and it's a big if, um, but I am watching very closely the job market. What's going to happen when it comes out in December? Is it going to show unemployment continuing to rise? What I've seen personally is the mortgage market, banks are laying off people left and right. I saw a thread about a week ago, and it was about 15 to 20 mortgage companies that laid off about 40 to 50% of their staff. 40 to 50%. So major layoffs happening. I know the freight industry is in dire condition right now. So if you go look at just news in the freight industry, there are some significant layoffs that are happening there as well. So if you kind of factor those two things in, if not to say that we want any bad things to happen in any industry, but if you look at what's happening, in the employment sector, you could potentially see how next month is also going to have, an uptick in unemployment. If that happens, you're going to see interest rates really start to calm down and I think stabilize with a normal spread between the treasury yield and the interest rates, which right now should be between 6.2 and 6.7. And I'm pulling this from the chief executive of NAR. It's a guy, his last name is Yoon, Y-U-N, and he has a lot of good information out there. So that's what I'm expecting. If we end up end of the year 6 to 7, 6 to 6.5 interest rates, or even like a 6.7. If we end up there, say January, I believe that we're going to have a decent market that is progressively moving and gaining momentum. So I expect that to happen next year. If we can get into the fives on the interest rates by spring next year, I think you'll see the real estate market open up. A lot of people that have this pent up demand that can't move because they're at a 4.5% interest rate now, and to buy would mean to move up to a 7.5% interest rate. That is a major, major increase in their mortgage payments. But if it's the 5.5, even if you're at a 3 and you move up to a 5.5, that is more doable. If you go from a 3.5 up to a 7.5, it's just not feasible for most people. So with that, I do expect there to be some improvement in the market, whether we come down to 6.5, 5.5, or somewhere in there. I do believe there will be some improvement in the market. With that, there's also the question of um, people are continuing to buy and sell even at 8% interest rates. And a part of that is what some people need to kind of factor in is that there are sales that happen based on life events, and those are independent of preference. Someone dies, leaves a house, they go through a divorce, they get a job promotion, they get relocated for work. So we are sitting at around 4 million real estate home sales for the year. I think it's like 3.96 is the projection. We'll probably end closer to the 4 million mark this year. Um, just for reference, 2021 we were at 6.3 million, so we're down about 2.3 million sales. From a real estate perspective, that means there's buyers and seller side. So you can see how the real estate industry, mortgage companies may be struggling because there's a lot less activity just in terms of volume that's happening in the current market. But with that, there's still a good bit of movement. It's not like houses aren't selling and people aren't moving. There are. 4 million is still a lot of people, a lot of homes. That's 8 million sides. There's 4 million buyers and 4 million sellers. So there's still a lot of movement going on. What about pricing? What's going on with real estate pricing? Well, it is complicated. It is complicated. So it's very market specific. We have a few neighborhoods, say up in Fort Worth, that are as hot as you can imagine. And then there are some neighborhoods that are around other areas that properties are sitting and inventory is just steadily building. It's the craziest thing. So the issue right now is if you've got a 3% interest rate and a house is $200,000 more and you want to upsize to that property, you're not paying the mortgage on extra 200,000. You're really paying the mortgage on an extra 500,000 because you got to go from the 3 to the 7.5. So that's what it feels like. So let's just say you have a $500,000 house and you want to move up to a 650. All right. Well, if you were to move up to a 650, it's going to feel like you're buying $1 million home because of the interest rate that you currently have on your home. That's put the market in kind of a stalemate where people that want to sell, that have been doing better in their job, that are making more money, they are growing in their success, they still can't buy another property because they can't afford the cost of the higher interest rates to make that move up. What that's causing is a severe shortage of inventory where the nobody wants to put their house on the market because they can't afford to buy the next home. And in that, you have this severe shortage of inventory where there's not enough houses that are available. Therefore, even with 8% interest rates, even with taxes going up, even with insurance costs going up, prices are staying pretty stable. That's the story of the industry here in North Texas. That said, it's very specific to neighborhoods because if you have growing inventory in an area you're going to see prices begin to come down. These 8% interest rates are causing inventory to grow in most areas. And with that, we're seeing reductions in the price. So, back in April this year, prices actually started going up and they continued going up through the summer. And interest rates actually started to turn and actually started going back up because I believe we started the month of May around the low sixes, and we thought we were on our way down on the interest rates, but they turned and went the other way, and we ended up crossing over the 8% mark, and things really slowed down. Well, what we're seeing now is the interest rates are sitting around 7.5. They were at 8, and we're seeing the inventory begin to grow. We're seeing people begin to do price reductions, and you might wonder, why are people so quick to do price reductions? Well, like I said, a lot of people are selling because of life events. A lot of people don't have time to wait until December, January, February, March, April next year. And with that, they are going ahead and making the correct moves to get the home sold now. And there's also some uncertainty. Who knows what the market's going to be like next year? I can say that interest rates may go down, but there's also stuff going on with Israel and Gaza and Ukraine and Russia. If something like that, were to escalate into a more severe, formidable encounter, we would not be talking about interest rates. We'd be talking about other items. So there would be bigger concerns that could affect pricing and the market. So there's a sense of, some people say, a bird in the hand's better than two in the bush. We may as well go ahead and make plans now and get it done. Well, the people that are serious about selling right now, a lot of them, if they're in areas where inventory is starting to build, they're making price reductions, and we're seeing pricing down about 6% in the last 45 days or so. So, with that, I hope it gives you a pretty good idea. I am going to have a lender on, and we're going to do another market update probably one day this month. But this is just kind of a live update. I've been doing a lot of research on it this week and figured I would share this, get it off my mind, and kind of share it. That way I can stop thinking about it and just move on to next week's news. As always, if you have any questions, if there's something you want to ping me about, maybe you want to tease my brain a little bit and ask me some questions, just for fun, feel free to shoot me a text, give me a call, send me an email. Would love the chance to connect with you. All my information should be in the link below. And as always, if you're thinking about relocating, to the North Texas area, Granbury, Fort Worth, Weatherford, Glen Rose, Cleburne, feel free to reach out to me, whether that be next week, next month, or even sometime next year. We'd love the chance to connect, to chat with you, and see if I can lend a hand with anything. So with that, I hope you enjoy the rest of your week. I do appreciate you tuning in, and until next time, hope to see you around town.